All right. I think we're good to go. You guys can all see my screen. So how did everybody's trading day go today? It's a pretty wild one. Yeah, just double checking. Everybody can see my screen, right? Just before I continue. Okay, thanks. All it says, what was your bias today for NQ? I was bullish. Well, you know what? That's a great question. Let's go to the daily check-in for the 28 plus trade challenge. And I'll show you. Let's see. Oh, here we are. So for me today, pre-market, price was actually below. When I say price, I just mean NQ because that's what I'm trading. But price was below the daily EQ. So I had a bullish bias at the start. And then, of course, when the market opens, the price starts to move higher. So, the reason I was bullish, besides just using a daily EQ, was that we have Asia high. We had London high. Was London high tag? Yeah, we had London high. We had Asia high. And then, of course, we had that massive NWOG, right? That's just sitting right here, which to me, that's a huge draw on liquidity. So I was bullish going into the open, but my bias flipped. And it flipped because right at open, price started to then move above that daily EQ. And when price goes above it, I start looking for shorts. And we'll talk about this barcode action here. And, just because an indicator shows you something, it doesn't mean it's the right trade or that it's good. And this is kind of what I was talking about in the previous stream, where we shouldn't just rely on an indicator to tell us when a setup is valid or not. We still have to understand and know, without the indicator, using strict price action, if that trade is valid or not, right? And I'll explain to you why I did not take this trade today. I was discussing it with someone in the premium side, and I explained to them why I didn't take it. And in a nutshell, it was just because of the daily EQ. But I'll go into a little bit more detail in just a sec, because I'll go back here. And so pre-market, price is below the daily EQ, bullish NQ. And then I edited it because once the price started going above the daily EQ, I said post-open price aggressively moved higher, so bias has flipped bearish. So that was my bias today. And I love trading on the 1 minute time frame. I love it because my bias can flip literally just based off of that one line, and using aligned buy-side liquidity or sell-side liquidity from a higher time frame, such as like the H4 or the H1. Could be Asia or London high or low, previous daily high, previous daily low. And then today's trade was with the New York high of day. So this is another kind of setup that I typically use. Truth be told, it doesn't happen often for me to take that trade, and primarily because the best trades usually happen at the start of the session. So if I take that session start here and get my win, there's no need for me to trade anything here, right? So I don't even bother. But today, because nothing happened here, and I'll explain to you, in my opinion, why I think we had a lot of this barcoded action, was because of this. Supreme Court doesn't rule on Trump's tariffs. 10:07. So it was a pretty, choppy morning, indecision, you could say, and I didn't even know it was because of this. And then once I saw this, I was like, oh, price is going to start moving now. So if we go back to the chart and look at 10:07, right here's 10:07. So starting from here, look, all the chop is done. Price starts to move now. So clearly that was a reason why we had a lot of that chop in the morning. And it looks like some people did not trade today. Okay, that's cool. Yeah, I mean, you know what? If your setup is not there, then don't trade, right? Like, it's important for us to also recognize when the conditions are not favorable. And truth be told, I wasn't even going to probably try trading. This is basically the last little ditch effort. I usually stop around 11:30. So if I don't get what I want by then that's it for me. All this says my reason for bullish bias. We had that sweep on the daily and SMT with YM targeting that NWOG. So yeah, I mean, if you're using a higher time frame, which we can look at as well, and let me just clear up my chart. So this is the sweep you're probably talking about, and then just kind of curious to see. I know you said YM, but just kind of curious to see if ES had any sort of SMT, and it doesn't look like it did. Let's just check out YM quickly. And there's your SMT right here, right? So NQ makes that lower low. Where are we? SMT bullish, right? And then right here you can see YM is making that higher high. So yeah, that's a good call out. Good thing to see it. We always know SMT is very favorable, especially when you start seeing it on like the higher time frame. That's a pretty good sign. If I was to try to align an hourly market structure to a long idea, though, let's see what that would have looked like. So 2, 3, 4, 5, 6, 7, 8, 9. So this is 9, and if you just look at the hourly market structure from 9 till about 11 or so, price is just moving up into bearish imbalances, right? So you don't even have an hourly market structure aligning with that. So that gets tough, right? Because when you don't have that alignment, and if you're looking for it, then there's nothing you can really do on the 5-minute except just wait. And then given the way the 5-minute looks, I mean, this is just pretty pathetic, right? Like you don't want to be trading in any of this. It's like save your mental capital if you're trading on the 5-minute, right? So that makes sense. Just double check, make sure I didn't miss anything. I saw oh, there it is. Okay, so Kcho, what is EQ? Yeah, I talk about this every stream, and that's cool. I'll keep talking about it. So the daily EQ is basically, typically the start of the Asia session. So it would be the high and the low of the day. Now, the thing with this indicator, and this brings me actually to the next topic of conversation, which also is about indicators and how we can't just trust it like 100%, because sometimes it does things in ways we don't want it to do, like it makes mistakes or it calculates in a way that we don't think is correct. And I'll explain to you what I mean. So I was looking at this daily EQ, and I always double check the daily EQ level just to make sure I don't just take it for granted. But if we look at the daily EQ from here, Tuesday, if I do this, and what I do is I'll just mark the high and the low, right? The high and the low using Fibonacci, and I'll anchor, so the high and the low I'll be anchoring, and then mark off the 50% level. So then when you go back down to, let's just go to the 30 so nothing else appears. So when I go to the 30, you can see that this is the daily EQ of the range. Now, the problem with this in terms of calculation is it's taking into consideration the Sunday evening open with that candlestick. That's how it kind of calculates it. So the problem now is that was Sunday night, and then it moves into Monday. We have a full session, and then Asia session starts Monday evening. So it's calculating it from Sunday, but in my opinion, the real daily EQ shouldn't be calculated that way. It should be calculating it from the Asia Open that was most recent. So that would have been Monday evening. So that opens at 6 o'clock, which is right about here. And we're measuring the high and the low from Asia Open to the start of the New York session. So if I mark it like this, you notice there's a discrepancy now. So now let's go back to the chart and examine how price actually moved. Now, you can look at this and say, well, it's not that bad of it's not that big of a deal. It didn't really make that much of a difference. So that's cool, right? But what I will say though is, if you look at how these candlesticks are closing, like this, for example, like this is not closing on the 50. This is actually like, in terms of what the indicator has laid out, it's closing on the 50 that I marked out, which is technically from the most recent Asia high or session high in Asia to the session low maybe in London, which is what we have, and it gets marked here. So the point of my story here is, don't just take the indicator for granted. And then secondly, that is what the daily EQ is. So this is my line in the sand in terms of how I form a bias, like I mentioned earlier. I keep it very simple, very mechanical. I find that there was a time where I learned about ERL to IRL, IRL to ERL, and it served its purpose for me. But one thing I started noticing, like I said previously, is that if I got my bias wrong, or the price just decided to do something completely different than what I intended the bias to be, I would start watching valid trades that looked so clear to me, but I was like stuck because I couldn't get myself to take the trade because it was in the opposite direction of what my bias was. So I'd get stuck in those kind of situations. Does anyone else have that kind of an issue? Like, have you ever experienced something like that? Ashley says, I sat out on an ES unicorn trade because we were above the daily EQ, and it saved me from a break-even trade or even a stop out. It was 0.5 points away from stop loss. So I want to ask, if a very clean IFG trade is above EQ, would you take the long? Well, if I'm considering the 20 A+ trades challenge, the answer is no. Because if I do that, I'm going to break one of my rules on my funded accounts, and then I'm going to have to go back to one, right? So my answer is no, I wouldn't take it. I would just be patient and wait. There's no need to chase or force anything. You know what I mean? Like, I know, and I'm sure you know, because I know you're looking at that daily EQ historically. You know, like, when an A+ trade forms, it's going to be on the right side of premium and discount, right? So for example, like today, I had that bullish bias and that flipped, right? It flipped. And I'm just going to delete everything again. We'll just leave this on the way it is. It's all good because it's just a line in the sand. But today, I'll explain to you what happened with my trade. So, as you know, I use H4 levels and I use hourly levels in terms of ERL, okay? So H4 wise, we didn't really have much to work with. If I go to the H1, however, we did have something to work with. Now, this is really interesting, okay? So if we're looking at this structure, right, we can see that, this is a very clear H1 BSL, right? But if we zoom in a little bit closer, see this level right here? So I'm just going to tag this level. So 25,412, and then the next hourly candle is actually 25,412.5. So 50 cents discrepancy between the midnight candle and the 11 p.m. candle from Monday. Okay? And if you're wondering, like, waiting for super clear levels, this is a great example of why I mark internal levels as well. Okay? So this is an internal H1 BSL, right? So I usually just mark it accordingly. So I have a separate thing. I'll just mark it like this, just so I have I can differentiate between the two. So if I go to the 5 minute, or actually let me go to the 1 minute. Okay, actually let's start here with 15. So this level that I had marked off originally is that very clear H1 BSL. This is actually Asia high. Okay, so we know that's Asia high. the most obvious scenario is we want to see Asia high get swept, and then of course we know that the NWOG is way up here, right? Previous daily low is also up there. But I play level to level, okay? And that little H1 midnight candle that was 50 cents, had a wick 50 cents higher than the 11 p.m. candle, that's this right here. It's an internal level. And the thing is, like, we can never predict what price is going to do. You can only react to the mechanics of what you understand those levels to be. So if I understand this level to be an H1 internal ERL, right, buy-side liquidity, and obviously this is the Asia buy-side liquidity, I have to play this level by level, or I have to just be very, very cautious and careful, right? Because I know that if these levels are too close to each other, that there's a risk that I'm going to get stopped out on trying to go short here and target that reversal. And in those situations, you really have to have super clear momentum on your side, okay? Has to be super clear. Now, the first move that happens after the news dropped, Financial Juice says 10:07, the whole Trump thing with the tariffs, then we start finally getting some moves, right? Now, the first move that goes up, we have a beautiful reaction off of that level. But the problem with that level is it doesn't give me any setup. There's no IFEG for me to work with, right? You see this? So instead of like forcing that trade and trying to find a way to get into that trade, like, I'm not going to change my trading plan. I'm not going to say, oh, well, there's a CISD here with a liquidity sweep, and now I'm going to enter on this candlestick, and I'm not going to trade the model that I'm trading. I had to just sit through that and not touch the trade. And I think the older version of myself would have jumped in on that, right? And convinced myself that, oh, well, I trade all these different models, and, I can trade all these models and it works. But what happens is it just starts to destroy your progress, right? And your stats and your numbers overall for the month, which then ultimately is going to impact whether you're, getting payouts or passing evals or working towards a buffer on a funded, you know what I mean? So that happened. Okay, great. So that level is now out of the picture. But I just wanted to show that level because a level as small as that, but it was technically still valid, can have a reaction like this. And this is why I say to you, this is why I don't avoid those levels. I mark them, okay? Now, nothing formed there, so all I can do now is just wait. So when price was just like dumping here, I was like, well, there goes the session. There's only one thing left to do, which is I'm going to wait like half an hour, and I'm going to see what price does. So I know I have the New York high of day here. New York high of day just refers to the kill zone, the AM kill zone, right? So I have that marked off here. Okay, and let me just rewind this. Take a swing of water. Let me just double check the chat. Ashley just said, okay, great. Felt kind of glad I sat out. But when this formed above the EQ, I sat out. But knowing if I wasn't using it, I would have taken the trade. Just gets you thinking. So I'll just quickly digress to what your comment was about. And I'll say that I think it's super important for us to figure out key filters for our trades. So what that means is, like, I use that daily EQ as a line in the sand. That's a filter for me. So like if I see long positions forming up here, I know I shouldn't be taking them, right? So this is filtering out those kinds of setups. Can those longs work? Of course they can work. Anything can work anywhere. But that's not how I'm personally going to trade. And I would ask that of you as well, right? Like, try to stay on the right side of premium and discount. Try to stay on the right side of your system. Whatever your rules are, your criteria, stay on the right side of that. So by you doing that, Ashley, that just kind of gives you more confidence that, maybe that kind of a concept is going to actually work for you as a key filter, right? For other people, it might not, because they're trading a different way, right? Maybe you're just trading the range, right? You're measuring the range. So that can really alter your perception of where premium and discount is. So it can get really slippery too, right? because you could technically say premium discount is here or here. It just depends on what you're measuring, right? So I'm measuring daily high, daily low of the current day, right? That's my range. So you have to identify that range for yourself, whatever that is. And then EQs. I love EQs in anything. I love them in FEGs. I love them in the daily range. I love them in, NWOGs. Anything that you can form like a range. I mean, even a breaker block, you can put the EQ in there and just watch how price reacts to it. It's remarkable. Super important. It's not like sexy, so it's overlooked with a lot of social media probably, right? Gambit is asking, what is your ideal A+ setup that you look for every day? Well, I'm walking us through it right now, right? So, so that was that reaction off that H1. I'm going to go into this in a sec, but let's talk about the trade first, okay? So just to recap, there was that H1 internal swing high that got swept, and then we had an immediate reaction. I didn't touch it. I didn't FOMO. I just waited, and then I told myself, okay, well, if nothing sets up by 11, the only other things I can work with now are the New York high of day becomes a thing, the New York low of day becomes a key level to consider, and then of course I had Asia high up here and the whole big NWOG. Now the problem with the NWOG is huge, and price can do anything it wants inside there. So I really didn't want to trade inside the NWOG, but it was nice to see that Asia high was here because I could still technically take a trade off that if price were to have given that to me. But what price ends up doing is this. So I get an alert set, and this is another thing. Set alerts on your levels, right? So you don't miss out, because sometimes I'm like looking at euro, sometimes I drift off and I start looking at altcoins. So if I don't have that alert set, I'm going to miss out. So now that I get here, my alert goes off. I'm like, okay, let's see what happens. So the first thing on my checklist, and this is going to answer your question, Gambit. Let's make this large so you can see. The first thing on my checklist is, the New York AM kill zone. So for me, even though I've marked off 11 a.m. as the high of day, meaning I calculate the New York kill zone to end at 11, my kill zone doesn't end till about 11:30. So for me, I'm on the right side of that on my checklist. Number 2, major liquidity sweep. The New York high of day and that H1 level, that H1 internal buy-side liquidity level, which I deleted, but it is there. The only reason I deleted it is because this tagged it already. But this is a major liquidity sweep. The New York high of day is a major liquidity level, and I'm going to show you why. Premium and discount. Well, we're above the daily EQ. I short above the daily EQ, so I'm on the right side. Instant reaction. So now this is where things start to get a little bit more like personal, and I say it because the way like I might deem instant reaction might be very different from the way you deem instant reaction. But I think we can both agree, or all of us can agree, that instant reaction typically means like an immediate move off of that level with limited, in this case, because I was looking to go short, it has limited bullish momentum. Okay, so as I hit play here, okay, I start seeing this. So this is a good reaction, right? And it's a good reaction for a few reasons. Number one, when you see a bullish engulfing candlestick like this followed by a doji, it could be even a hammer, and then you start seeing a bearish candle on the other side. This is a very key reversal pattern with retail. I keep mixing up if it's like evening star or morning star. I can't even remember half the time, but I remember it's one of those stars. But this is a huge reversal chart pattern. Okay, so I already know from my retail days that, okay, that actually looks pretty good. The doji here with the wick tells us indecision, which is great. The only thing remaining now, because I got that instant reaction, is, whoops, let me put the IFEGO here. The only thing now that I need to see, because I already have my drawn liquidity, right? Even though I know Asia's here and the NWAG's here, I can see all this LR right here, right? Especially this. This is essentially what I was targeting majorly, and then anything beyond these two levels would be like down here if price were to allow it. But I wasn't really worried about that because I would have already been skimming profits anyway. So I already know what my drawn liquidity is. I already know where my TPs are. The only thing I now need to see is strong momentum ripping through this IFEG. Because the second I get that, that's my confirmation, right? From all of this. So hit next. Hit next. Okay. So now we get a nice clean move through the IFEG. No bullish candlesticks right after price swept the New York Hive day. So I felt confident enough to take this trade. It fit all my criteria. Right, so market order entry. My stop loss just went above the IFEG. I just placed it above this candlestick. I like that high. It's about 29.5 points or 29.25 points stop loss. So it is on the larger side. But given how the day was playing out, like there's some massive candles forming here. Right, it's expected that those types of imbalances are going to have a larger size to it. So once again, my first target was basically right here, and I usually aim for about 20 to 30 points on TP1. Okay, so I'll mark that off as TP1. And my next level of interest was actually right down here, which is, you can see that there's an FVG here, right? So the EQ is in the middle, but I was just going to target the low of that FVG. So that would have given me about that takes me to about 54.25 points. So that's actually a solid trade if it works out. Anything below would have just been bonus, right? So, taking profit even down at this level and then maybe taking profit somewhere down here if I had enough contracts. But I ended up closing off pretty much everything in here, and I left a runner just in case, but I'll show you what happens next. So that was the process, Gambit. That's my ideal A+ setup, right? Whatever happens at this point now is beyond my control, and that's the probability of this. You got to play to the strengths of the edge that you have. So for me, the edge is in the IFEG, right? That's the technical edge. Everything that's kind of built around that with these concepts are just having a better understanding of like what is defined as an instant reaction. Like, what does that look like, right? You have to be able to understand what the candlesticks look like in order to know what an instant reaction is. Strong momentum, right? Like, even something like that can differ from one person to the next, right? When we start seeing like, clean slicing displacement leaving behind FEGs, like we know what that looks like, right? Because with unicorns, that's like the ideal scenario, right? We really want to see that because it drives momentum. It shows us that there's, there's a reversal about to happen, things like that. So with this trade, this is still good enough for me, right? Because we got 1, 2, 3, 4, 5 candlesticks closing bearish right through. There's no consolidation. But here's the thing. I don't know what's going to happen next. And that's trading, right? So you play to that edge. You play to that probability. Let me hit next. So now I end up seeing this start happening. So there's about 8 minutes worth of consolidation and chop now. So this is not something I want to see, right? Because, a few candles, reversal, price dumps, that is maybe best case scenario in this situation. But this thing just kind of kept chopping around, right? And then this happened. So once I started seeing this candlestick, let me just move this over. Once I started seeing this candlestick open and start to move higher into the IFEG, I immediately flipped on my MA ribbon, okay? So in previous sessions, you've heard me talk about the MA ribbon. I like to use the EMAs to help me understand the trend a little bit more. It just gives me a little bit more insight. So I flipped it on, and I'm not going to lie. I flipped it on because I started to get a little bit of anxiety, right? I was like, oh, shit. I trade off the New York Hive day, but I knew, I was thinking in the back of my head, if this thing hits stop loss, it's 100% because Asia High is up here in the NWAG, and I already full well knew what I was doing. So I flipped on the MA ribbon thinking, let me see if it gives me some more confidence into this trade and help me out, calm my nerves, right? Because the last thing you want to do is after following your checklist, you then start to interfere with it and make an emotional decision, right? And I'm not going to lie, that crosses my mind all the time because I'm a human being and that's going to happen and it's okay. But this is why we have to use very logical, mechanical things to kind of reel us back in. So for me, I flipped on the MA ribbon and I'll just show you my settings. So actually this should be EMAs. Let's go like that. Oh, now I know why I have it set that way. My bad. So the reason I have the faster moving averages as SMA, so SMA is like simple moving average, EMA is exponential, so it's just a faster version of it, like the way that it's calculating. I want it slower because I just wanted to give the price more chance to breathe within those MAs. So that's why it looks like this, right? You can see it has nice space. It takes a little bit of time to form, and then that way price has that breathability when it starts to move up or down and start to create wicks. So as I'm watching those MAs, I'm starting to feel more confident because I know that if price starts closing above these MAs, then I already know that like my trade's pretty much going to be cooked, right? What I want to see, obviously, is momentum, right? So in this case, you can see how these three MAs are spread apart. They're all moving in the same direction, right? And then we get a flip here. But ideally, I want to see something like this play out to go the other way. So before that happens, though, I need to see rejections. And as you can see, there's rejections. Now, the 200 EMA is down here. So this is also aligning as another potential target because price loves to move off of these levels. So you can even see here at the open, price is moving with the MAs, and then there was that nasty retrace, and guess where it pings off of the 200 EMA on the 1 minute, right off the daily EQ. So good confluence there, and then price moves higher. So I'm thinking as I'm looking for like a clear drawn liquidity now, as I turn that thing on, that indicator, I'm like, oh, well, that level's there too. So that could be a good drawn liquidity as well, another target. Let's see what happens. What I do know, though, is price is respecting the bearish curve or the nature of these MAs. So as price starts to now dip, this is where I'm now rewarded with patience, or by having patience. So the second price dips here, and this whole time in this area, my finger is literally on the buy button because I'm going short, right? So I want to buy back those contracts. So my finger is on the buy button. The second price dips around this area, I hit the buy button. I take some TP off the trade. I move my stop loss to break even, or a little bit below break even, just to cover fees, right? Because I don't want to get stuck paying. I don't want to be stuck losing money in a trade that it was already a winner, right? So you might have to move. So I move my stop loss a little bit below break even. So TP1 hits, beautiful. What happens next? Price continues lower. And this is the beauty of why I like trading IFVGs, because especially on the 1 minute, the momentum is super quick. The trade is over usually in 10 to 15 minutes tops. The funny thing about this trade is you had 1, 2, 3, 4, 5, 6, 7, 8 minutes of consolidation, but it only takes 3 candlesticks, 4 candlesticks to get to that TP level, which is TP1 and TP2. So now TP2 hits, I close off another contract, right? I close off more, and I just have runner left. So ideally what I want to see here is either just, a complete tanking lower, then I can just close the trade fully, or my stop loss is just kind of trailed now somewhere around here. And if price does manage to get back up here, that's fine. I'll exit the trade. I already skimmed profits, especially on a day like today. This is not the day to get, no days you should be greedy, but a day like today, you should be very thankful. I say you, but I just, was talking to myself that I should be very grateful that I even had this opportunity and I was able to capitalize and even get anything today, because today was garbage for most of it, right? So good reminder to stay humble, stay grateful, and stick to your plan, right? My plan is just skim profits, move the stop loss to break even, and be aggressive that way. So let's see what happens next. So right there, I'm now stopped out, and if I were to have continued to let this trade run with the concepts of 2R, I just want to show you this. Here's 2R. So old version of myself. Oops. Let me just close off this. Let me just close off the checklist. And let me move this over. Okay. So old version of myself would be like, well, it's like, 2R or minus 1R. But I think we got to have some common sense with this, okay? There's nothing worse than entering a trade and then being stubborn or having too much pride in just not taking the profit when it's close. It's okay to not be perfect. It's not okay to give profits back. And if you're trading on prop firms that have intraday drawdown, if this hits stop loss, right there would have hit stop loss. This is actually a double loss, because the intraday stop loss is calculating all of this. So this is, and because it just barely missed 2R, this is a double loss. And when I first started learning about Apex and trading unicorns with futures, I got humbled by Apex very quickly because things like this kept happening to me. And it was very, very discouraging for myself. So when you start to get extremely discouraged and, not aligned vibrationally with what's happening, like, you got to start to reset things. You got to look within. You got to go back to the drawing board in a way to figure out, based off of all the knowledge you're learning, what's sticking on the wall and what's not sticking on the wall. And this is a big reason and a great example of why I just skim profits now. And I'm not worrying about perfection. I'm more interested in capital preservation. I'm more interested in, if the market gives me profit, then I'm going to thank the market for giving me profit, and I'm going to start closing my position, because the last thing I want to see is all these gains not even skimming any profit, and then V-shaped recovery and it goes to stop loss. Or if I had my stop loss set to break even, to see this trade even hit break even and not get anything out of it, I would have flipped my desk. Things like that used to happen to me. I'm not sure if it happens to you, but it has happened to me. Just going back on the chat, Ashley had said earlier, true, I didn't have a decent filter for me taking trades, so this helps. What about midnight open as well? I don't use that. Just curious about your view on that. So digressing to that, I used to use the midnight and the 7:30 levels, and I do still kind of use those concepts with, like, when I'm looking at, say, Bitcoin on the 15-minute. But the moment I started trading NQ futures with the IFEG, this replaced that. I didn't have a need for it anymore, because the daily EQ serves the purpose magically. And if you find something that is working, like more often than not, or even like, let's say it's working 80% of the time, like, why do you need to replace that? Like, why are you trying to find something better than 80%, let's say, right? I'm just throwing that number out there. But it's just that idea of, like, you can't keep, chasing the magic dragon, right? At some point, you have to settle with what it is and start to pinpoint other areas of your trading that make sense to you to help you become profitable. Rob says, Asia high was my hard time frame POI for the uni entry. Okay, that was probably on a previous setup or thing we were looking at. Gamma Profit says, is the New York AM kill zone the only key level you wait for before looking for a valid setup? So the answer to that is no. My levels, I'll just type it out for you so you can see it. So my key levels, let me just make this 28, make this white. So I look for H4 H1. I look for previous daily high, previous daily low. I look for Asia high and low. I look for London high and low. And then, of course, today, New York high of day, low of day. The only other thing I also look at is the daily EQ. Because sometimes you can catch a trade off that daily EQ, right? Think of it like support and resistance. If you see enough momentum, let me just go down for a sec. So like if you see, so like, I mean, this is a great segue to talking about this. So let me just quickly go that way. Let me hit this. Let me hit this. Move this guy over. Okay, so I like the daily EQ as well, but the thing with the daily EQ is I like it when, like you see how price was moving higher today, like it went here, and then actually, you know what, let me just do this again because it makes way more sense. So like something like this, actually this is a perfect example, okay? It just happens at a time that I don't want it to happen, but you see how price is moving from an extreme back to equilibrium, right? Back to the median. That's where I want to look for that reaction, right? That's where I want to look for, it's not so, I mean, obviously the kill zone, the liquidity sweep, you know, that's typically the higher time frame level, right? That's that concept. Premium and discount, well, that's this right here, of course. But more importantly than all of that is the instant reaction and the strong momentum. So like when price starts to move from the extreme into the daily EQ, I want to see how price responds to that, because if there's an instant reaction, right, like similar to this trade up here off of that New York high of day, that's a massive step that there could be a reversal here in a trade. Step 2 is the strong momentum, right, to confirm the IFEG. But when you look at something like this, there's 2 reasons why I wouldn't, or actually 3 reasons why I wouldn't take this trade. Number 1, I already took a winning trade, so day is over in terms of trading. But number 2 is that it's outside of that kill zone. This is now trading inside the lunchtime range, which, or you could say kill zone or whatever, but like that's not where I trade. That's not where I conduct business. And then number 3, which even if number 1 and 2 didn't happen and they were aligned with, you know, the New York AM kill zone, or I didn't take a single trade today, when you start to see FVGs pile up like this and stack on each other, that is not a good sign to take that trade. You want like singular FVGs, and you want price to be reaching for like ERLs, like swing highs or swing lows, because price needs something to reach for. If you can already see the draws on liquidity the second you even want to enter the trade, like the price can literally reverse on you at any one of these FVGs. And is it worth it to take that trade at that point? No, it's definitely not. So a third reason why, you know, I wouldn't have taken this is because of this, but that is what I'd be looking for. And that's an example off the daily EQ. So like a massive move back down into the daily EQ, but then I'd be looking for an instant reaction. And I mean, I think you get somewhat of an instant reaction here, right? If I go to a higher time frame, it'll start to tighten it up a little bit more, right? So like this is better. Less candlesticks. The problem is like this is a pretty massive FEG, right? So if I were to measure this from here to here, 17.5 points, like, I mean, I guess today has been one of those kind of days where FEGs are going to be huge anyways, but I would typically move up a time frame to tighten up the candlesticks and show me an example, or show me that NQ wants to like move with momentum, right? Because if I go to the 1 minute and I see lots of chop happening, that's not really showing me, once again, instant reaction. If I go to the 2 minute though, it's forming more of a V, right? But then I got to fall back on the lessons and the concepts of an IFEG in the first place, right? And in this situation, you see how there's 2 FEGs stacked on top of each other like this? So what happens in those situations is that's your IFEG, which means I would want to see one candlestick close above this level, not just here. You know what I mean? And because that didn't happen, that's another reason why I would not be into that trade. So a little bit of strategy there, a little bit of just fine-tuning little specific things. But these types of nuances, they really do go a long way. And they're very, very beneficial because you're going to get thrown into the pit and start seeing things like this happen. If you're trading IFVGs, or even if you're trading, any other pattern, right? Like even if you're trading the unicorn, like you still want to understand the difference between like instant reaction and non-instant reaction, strong momentum versus weak momentum, right? Like it's very, very important to understand what that looks like and what that feels like, because when I saw this setup, this felt good to me. The reaction was great for me. I liked it. And it fit all criteria for me. So that only comes with practice. That only comes with exposure by, being on the market, like trading the market live, whether by paper or with funded money or evals. I showed up on a bank holiday to trade. I wanted to trade evals. I wasn't going to touch funded. So I had an eval, but I ended up not trading it, and I just started watching. And, that was a super clean setup. Like, super, super clean setup. Just like straight V-shaped recovery. What a banger. So, anyways, H4 BSL, SSL, H1 BSL, SSL, previous daily high, previous daily low, Asia high and low, London high and low, New York high of day, low of day, and then the daily EQ. That's it. I just mark these levels off. My indicator pretty much marks a lot of these things off for me, right? These are free. ICT kill zones and pivots. Just snap on, the sessions. Adjust your aesthetics however you want. I also have on that setting the previous daily high and previous daily low activated on that indicator. And, aside from that, these other levels I'll manually mark off like I showed you, right? And then usually like the beauty of this indicator, the IFVG Pro Plus indicator, is like I have alerts set on that indicator. So if it's like, if there's a potential, here, I'll show you what I mean. So like if there's a potential bearish IFVG, I'll get an alert. And that will happen before price moves to where I want it to go, right? So in this situation at 11:26, which is right about here. Okay, so right here, price is pushing me with an alert saying there's a potential bearish IFVG. And then the next thing I know is like price is now moving, and I was in that trade, right? But price is now moving towards that Asia high. So that's signaling where the potential bearish FVG or IFVG setup could form from, right? You can see 11:13 is the same thing. Where's 11:13? 11:13 is right here. Because once again, it was looking for, because I'm using H1 liquidity levels, it was looking at this level. So that's the beauty of with indicators. Like you got to make them work for you, right? You got to make them make your life more efficient, and not use indicators to make your life more confusing or more stressful, right? Because the last thing we want is to add more stress to our day when we're trying to trade. Okay, great, Ashley. That's awesome. Yeah, you got to do what's best for you, of course, right? I think, once again, I like the daily EQ. You can see why. But I have used midnight in the past, as well as 7:30. And I've used both those levels, kind of stacked them. But to me, the daily EQ is just so powerful. Interstellar is currently in a short. Okay, right on. What asset is that? Sorry, just got to zoom in. Okay, NASDAQ. 5 minute. Okay, let's take a look. Let me get rid of all this stuff. If anyone has any questions about anything that I've been talking about, feel free to drop it in the chat, of course. If I missed a question, I apologize. Just please rewrite it or retype it into the chat. Okay, so you took a short from here. May I ask what your criteria was for that setup? Fractal model. Okay, perfect. So there's probably like a C2 here, and then playing off like an order block or whatever. Okay, so GXT. I've heard of GXT. I don't know what he trades. I know he's with the lens, but I don't know exactly what he does. This is the thing with learning. Like I spent all of 2024 and then even 2025 studying my ass off with all kinds of things just trying to devour as much information as I could from, quality traders that are, highly successful and highly intelligent. And at some point, though, you have to hit the brakes. Like, you can't learn everything. And the problem with also trying to learn everything is you're never going to like stick to one thing. You're going to do it for a little bit, and then you're going to like, fall, out of love with it. And then you're going to move on to the next, shiny object that's, being presented. And that's a dangerous loop. I think all of us have been through that, myself included. It's not fun. I think the only real way to like work through that is to, study and learn core concepts that align with what makes sense to you, that feel good, and then kind of double down on like a singular model and show up and, trade, paper trade, live trade, whatever it is, the market for what it's giving you in real time. Live price action is the greatest teacher you're ever going to have. You're going to accelerate your learning more by just showing up every day for live price action versus backtesting. Backtesting is great, but backtesting will only give you confidence that, your model has an edge. Because when you go back through your backtesting and you're like, oh shit, I did a year's worth of backtesting and, I'm profitable month over month. My win rate is, I don't know, let's say your win rate is 70%, right? That's just giving you confidence that your edge works, whatever that edge is, right? So unicorn is an edge. IFVG model or IFVG is an edge. Putting those other concepts together is what creates your system, though, right? Your system is not your edge. Your edge is the defining piece of your entire system, right? So for a lot of people, it's the unicorn, like I said. And for me, once again, it's the IFVG. For some other people, it could be an order block, or it could be a change of state delivery, or, I'll even go, another step further and say, like, it could even be OTE, right? The 2022 mentorship model, where you're looking for a liquidity sweep at a higher time frame POI with a break of structure, leaving behind an FVG, and then you just trade the EQ of that FVG on the retracement, which typically looks like OTE, right? If you're measuring with fibs. But you got to stick to something and then show up every day, because that's kind of what I started doing in 2025, and that's how I started to figure things out more about myself, because I was showing up every day to trade a 5-minute unicorn, and what I started learning was that, like, for me, trading on the 5-minute to learn was great, but when I was like ready to start to trade with accounts, it was not so great, because I felt that I wasn't getting enough trades, right? Now, Matt is a amazing trader, incredibly disciplined, probably the most disciplined of anyone I've ever seen, really. And now he's getting credited with something beyond a live account with MFFU. I don't even know anyone else who even has that type of thing happening for them. But here's the thing. The way his patience works and the way his model works, the way he trades it, aligns entirely with who he is. I come from a crypto background. I am like used to fast-paced gains. I'm used to being in and out of trades. I'm not used to waiting. Almost degen-like, okay? Degen meaning more reckless, though, right? Like chasing things, chasing breakouts for like quick wins, things like that. Not really worrying about your risk so much. But I personally align more with that type of style, right? The fast pace. So for me, it's natural that eventually when I started to learn more about IFEGs that I would gravitate more to it, right? Because I can trade on the 1 minute time frame. You see how quick the trades form and how fast that they will play itself out. So this totally aligns with me, but I have to keep showing up every day to improve on my process. Like my process has changed, and by journaling and by fine tuning things. So that's my only point. Stick to one thing, show up to trade live with it, and journal everything you see. double down on what you have. And that's the beauty of the 20 A plus trade challenge, right? Because it's going to force you to do all those things, right? I mean, I just want to quickly go over this, but yeah, I still got time. So like, we had a good amount of people that have signed up. If you haven't signed up, please do. It's super easy to just join in. If you don't know much about this, just click on the challenge info, read through it, and then your next steps are basically just the sign up process, and then you're good to go. And then every day what we're doing is we're checking in. So for me, let me show you my check-in. I'll just speak for myself right here. So today, January 20th, right? I already talked about the bias. I'm showing you what my A plus setup and I'm hunting is, right? Clear high time frame sweep with a liquidity, strong IFEG reaction. I had my alerts set. My max trades allowed were 2. Why do I say 2? But I only took 1 today? Well, because my first trade was a winner. If my first trade's a loser, I'll trade again. And then if that's a loser, I'm done. But if I take that first trade and it's a winner, I'm done. I just take that win and it's good enough. Emotional state, I'm pretty relaxed and chill. So I'd say I'm a 1 today. And then, one thing I will not do is break any rules to my trading system. And once again, that's why I have a checklist right on my screen, because this is going to remind me when I'm hearing voices in my head to enter trades like this one, right? Like this. I'm not going to lie. I got tempted. I got really tempted here, but my rules kept me out of that trade. Okay. So it's super important. And, so don't break your rules. So yeah, you do your daily check-in every day at the top of the session. And then if you do take a trade, you go to trade proof and you document, right? So we want to have before screenshots and after screenshots, and we just want to attach them in the singular post. So for me, trade 1 of 20 is done. So, I mean, that's a win. My instruments there, my time zone, or my session time, my setup, why this is an A plus setup, in specifically this setup. So once again, it was an A plus trade because it was inside the New York AM kill zone. It had swept the New York high of day, as well as that H1 internal ERL. There actually was also SMT with ES I learned after, which is obviously a good thing, adds more confluence. And then once again, good reaction from that sweep, and then strong momentum confirming the IFEG. And then we start getting to like the nitty gritty stuff, right? Like how many points did I risk? So I already told you guys it was like pretty high. It was like 29 points on the higher, the higher end of the spectrum. You mark off your entry, you mark off where your stop loss was, and then you mark off where your targets are, right? So for me, because my targets are, because I'm skimming profit, I have multiple levels. But just because those levels are there doesn't mean I'm taking profit like exactly at that level. Because like I said, I'm manually skimming those profits. And then my attachments are below, right? So here's the before, right? This looks pretty damn clean, right? Looks pretty smooth. And then here's the after. My entry, market order, TP1. And I actually took TP early. If you look closely, I actually took TP somewhere in here just before this because I didn't know what was going to happen, and I didn't want to get greedy because I was feeling pretty lucky as it was. I had no idea, obviously, the next candle was gonna move lower and actually sweep that level, but that's okay, right? Like, that's totally fine. And then you'll notice that the next candlestick has a blue arrow here because I end up getting stopped out with a trailing stop loss. I think my stop loss was around here, so it tagged me out about here. So I still managed to get even a little bit more profit out of that trade before it obviously would have wiped me out. But yeah, you set up your screenshots there, and then you mark off your trade results. So for me, it was a win. It was 53.75 points. I took 2 TPs, had a final runner that was stop break even. I just put break even because that's what the plan was. Emotional state after 2. Why did I put 2? I had some slight anxiety, right? I talked to you guys about how when price started to do this for 8 minutes, I was like, oh man, did I make a mistake? Right? Asia high and the unmitigated NWAG were above, and then I know it's a huge drawn liquidity, right, on the higher time frame. And then also with price chopping around, like I mentioned, and we already talked about that. So that's basically it, right? Like you fill it in, you be as honest as you can. I'm not posting this for anyone else. I'm posting it for myself. I swear, if you can do this, 20 times in a row, you're going to be like, in the wise words of Bob Proctor, you're going to need a telescope to see how far you've come after those 20 trades. Like, it's going to be remarkable. In previous live streams, I talked about the 2090 program and, how epic and life-changing that was, because it just unlocked so many more things about trading I had no idea about. It unlocked and it revealed so many repeatable mistakes I was making in trading, that I only learned because I kept journaling. And then every month I would go back and look at my journal and go, oh shit, I'm making the same mistake over and over again. That mistake doesn't have to be technical either. That mistake can actually be mental, as 80% of this thing is mindset. So there was parts of some of those repeatable mistakes where I was actually having like FOMO, or I was like forgetting certain parts to the system. And that's why like you see me with a checklist now, because I don't want to forget, even though it looks so simple. How could you forget? But when you're like in the heat of the moment, anything's possible, right? Anything's possible. And I mean, I'll give you an example. You guys are probably going to laugh, but like I love watching Hell's Kitchen. So I watch like older seasons too. So I'm like watching like season 20 right now. It's the Young Guns. So these kids are like 21 years old. And, there's one part towards like the tail end of the whole season where each chef has to kind of run the post. And Gordon Ramsay and his team are basically like, they're like throwing curveballs at the chef to see if like the chef's going to like notice the curveball and call it out. So one of the guys basically doesn't catch the curveball, and Gordon Ramsay had switched, he had switched the beef tartare for tuna tartare, I guess. And it looked very similar. And he kept asking the chef, like, are you sure? Are you sure? Are you sure? And what's funny, and the reason I bring this up, this is my point, is that Gordon Ramsay started to spell out what it actually was. And he's like, T-U-N-A. And the guy was in such mental overload of stress. It was like he wasn't even listening to what Gordon Ramsay was saying. He was giving him the answer. I saw that and I immediately thought about trading, because how many times are we completely overrun with emotion or stress, and then we confuse ourselves, and like, the answer is right in front of us, right? Similar to Gordon Ramsay saying T-U-N-A, and this guy is like not even hearing it. So just an interesting correlation that I came across from yesterday. Actually, I watched that episode yesterday, and now today we're talking about this. So kind of funny. Maybe I'm the only Hell's Kitchen fan here. All good. Let me just check the chat, make sure I haven't missed anything. Gamer Prophet says, I feel the same way. It's real slow to hunt for the 5-minute unicorns. That's how I've been learning through for the past 4 months. I find the hardest part is the super wide stops, making my targets super big that I don't even get filled before market close, or I'll get 1R and then it reverses and stop me out. Oh my God. I relate to that 100%, man. I honestly, I relate to that 100%. And I think that's why, like, if you study Matt, he's very selective on the types of unicorns he takes. But the way he's able to kind of determine what he'll take and what he won't take, that's a skill that has come because he's been trading for 7 years, right? Like, you can't learn what he knows in 1 year or 5 days or 6 months, right? Like, it's not going to happen. And I'm usually in a trade for hours. I don't enjoy that at all, but that's what Ash told me to use to learn the daily, the 1 hour, and the 5 minute. Yeah, I mean, remember, like, you're building foundation. So for me, everything we're all learning, or that we've already learned inside Unicorn University, it's all foundation, right? You have to understand how to use the higher time frame with the lower time frame and how to align them. If you're not even able to do that with ease, you're not going to make it. Even the way I trade, like I said, my foundation is rooted in the concepts that Matt has taught me, right? And he's teaching the same things to everyone else. Right? Like I'm using higher time frame levels. The thing is, like, I don't have to use the same higher time frame levels exactly that he uses, right? Like I don't use higher time frame FVGs, for example. I'll take note of them, and if it's there with a buy side liquidity level, then it's like, oh, there's a high time frame buy side liquidity level as well as a bearish FVG in the same area, right? So there's confluence to that range being important. Things like that, right? So, foundation. Okay. Could you talk a bit more about your journaling with Notion, please? Next time it fits. Yeah. You know what I'll do is I'll make like a mock version of my journal, and I'll share it with everybody. Maybe in a future session I'll dive a little bit deeper. But you know, for the most part, here, you know what? I'll see if I can do. 1 second. Give me 1 sec. I'm just going to. I'm just duplicating a blank to create a template, and then I'm just going to put it up on the screen here. Okay, awesome. Hard beholder. I'm big on Hell's Kitchen. Good explanation. Thanks, brother. I'm glad you caught that, man. Let me just. All right, so I'm just going to move this over here. Okay, so this is basically, you know, it in a nutshell. So this is exactly what I'm using right now in terms of my journal. And like I said, I will deep dive on this later, but I'm very quick to note what trade I'm on, right? So it could be, like, I'll give you an example of how I would do this, right? So let's say I took a trade and it's a winner. I'll put the 1 there, and then I'll also put one of these in there, right? And then if I have another trade and it's a loser, I will put an X. And let's say I take another trade and it's break even, I use the lightning bolt. So you're probably wondering, well, why are you using these funny emoticons or emojis? The reason I do this is because if I hit calendar, which I've also got open here, now it should be showing me. It's probably because I don't have it set out yet. But what happens is it starts to show you check marks that you've marked off from here. Probably because I haven't filled any of this out. Let me just fill this out. So 20, let's just put 19, let's put 16. Okay, so basically the date when the trade opened, I like to mark off like what day it is. Is it Monday? Is it Tuesday? Is it Wednesday? Right? The reason I have it set column by column is because then I can filter things out, right? I can sort things out. Asset, you know, I have NQ, ES, and GC here, but when I started reviewing my journal, I started realizing that I'm better off just trading NQ and not stressing myself out trying to trade ES and GC. So I just stick to NQ now, but that's why I have these here. Execution, super simple, right? Like execution is there because I'm gonna put that screenshot that I've taken that I was showing you with the daily, or sorry, with the trade proof in the 28 plus trades challenge. I'll just put that trade execution here, and then additional screenshots is basically where I'm just sharing any other screenshots, right? So that could be maybe like I have a screenshot of where the SMT is. I have a screenshot of the higher time frame. I have a screenshot of my entry. I'll mark if it's a win, if it's a loss, if it's break even, right? Because if it's a win, it's going to note it here. If it's a loss, it's going to note it here, right? If it's a break even, it's going to note it here. Points, pretty obvious. P&L, it's just showing me how many dollars I'm making per trade. I think it's important to know what you're making, and keep very keep a very close eye on that, because what happens is then you can start understanding if you're breaking your risk, right? Like One trade you take a $250 risk. Next trade you take a $500 risk. And then the next trade you take a $150 risk. You'll start noticing your discrepancies right here, right? Especially with your winners. Entry time, pretty obvious when I get in. Duration, how long the trade lasts. Like I said, I'll just put like today was 11 minutes. And then trade type, is it long or short? The reason I have this here is I'm just kind of curious to see if I'm taking more longs or more shorts. And then if I am taking more longs or more shorts, which direction do I have a better win rate with, right? Or which direction is NQ giving me a better win rate with? And then notes is just basically where I'll put like, Asia high swept, SMT with ES, zero drawdown, price went to 3 TPs, full target reach, something like that, right? So that's how I journal. And with Notion, you can create folders, and then you just start to keep duplicating your journal, and the next thing you know, you'll end up with like like something like this, right? You'll just have tons of journals flooded, right? And then you can go back on that and start to study it. So I love Notion for that reason. It's amazing. I even have what else can I show you? Like I even have a sizing guide for points. So like usually what happens with this is if I like measure out my trade, right? Like I'll measure out that short I took today, for example, right? So that was about right here. My stop loss was right there, right? So 29.5 point stop loss. If I was to go back to the sizing guide, I can now start to tell like, okay, 25, now that was at 29, right? So I have to be mindful, but if I'm risking $200, then that's going to work out to about 4 contracts based off of those points, right? Same thing here. So this is like a quick little, like a cheat sheet that I can use to just quickly input the contracts because I'm trading on the 1 minute time frame, and I have to be super quick. And I can't be worrying about like sliding a button like up and down, trying to figure out the sweet spot. Like I have to be quick. Right? I don't need to be stressing out. Try to make your process more efficient, right? I'll have this up and running on one of my tabs, so I just have to quickly click it to see, and I'll know right away. So make your life easier. You know what I mean? No problem, brother. No problem. Sometimes you're a bit careless with your journaling in the past. And I know how important it is. It is 100% important. And the thing is, like when I joined UU, I had no idea how high the bar was set. There was a couple other traders who they were like Notion wizards. Like my Notion, I like my Notion, but the way they had their Notion set up, it was like some sort of like engineering software development thing going on in there. Like I had no idea how they put things together and why they needed it to be that complicated, but it looked amazing for what it was worth. But my point with that is I never realized how high the bar was set. I didn't realize like the right way to journal. Like I would journal in the past, but I would not journal like this, right? The way I'm journaling now. And your journaling is going to change as your trading journey goes on. You're going to start noticing, different things are going to be more important for you to capture, because when you're reviewing, you'll probably have some sort of aha moment where you're going to be like, oh, I wish I tracked that stat with this trade because it would give me more insight into the system I'm trading, right? And then you add that for the next month. And then you keep moving on, and maybe you're like, oh, why do I need this column here? I don't need it anymore. It's kind of useless. Like knowing, I'm just saying as an example, but like a long short column like I have, like maybe it's useless having that. So I can take it off, right? We always want to have things around us that are helping us and making our process efficient. We don't want to have things around us that, once again, create stress, create hurdles, create confusion. We don't want that, right? In all aspects of our life, basically. Let me just double check if I missed anything else. Okay, perfect. So, okay, 220. Okay, the last thing I'm going to talk about, and then we're going to wrap this up because I wanted to finish off with EU. I share EU setups inside the Forex thread. My model I went over previously in another live stream, but I just wanted to show that this one actually worked out. I'm having really, really good success using the daily and the hourly, And I'm trading a completely different trading system, more aligned with an older way of how I used to trade futures, actually. But I found it works really well with EU on the hourly. So I'm literally just looking at daily buy side or sell side liquidity levels. I'm also looking at the the FEGs, right? But the thing is, I'm using the monthly EQ to kind of put me on the right side of premium and discount. So once again, that EQ level is coming into play for me here. And it has really helped me and added a really nice filter, because before I put this on here, I was actually using like a range, in the sense of like I would measure an actual range, right? And then that would give me my premium and discount. But now that I'm using the monthly EQ, I feel like that level is like a really nice level in the sand, especially when it comes to the daily and the hourly. So once I get that sweep, and I had shared levels I was looking for, right? It just happened that this first level gets tagged here, right there. And then if I go to the hourly, the next thing I'm really looking for is I'm looking for a lower time frame liquidity sweep, right? So initially it was right here, right, on that open. And then, but then we got another sweep. So then that changes where the liquidity sweep is. You'll notice I wrote the words DIV here for div. And that's because I'm tracking RSI divergence. So RSI divergence is when the RSI makes a higher high, but the price action makes a lower low. Sorry, let me say that again. The RSI makes a higher low, but the price action makes a lower low. So that shows us that there's RSI divergence that's bullish RSI divergence. So I kind of track it just to see, because I find that's another good tell for a reversal. It's similar to SMT, except it's not SMT, it's RSI divergence. SMT would be obviously if I pulled up a correlating asset like GU, and you can see right here there's no SMT, right? Both assets made lower lows. So once that level gets swept, I see a liquidity sweep. I'm marking off the change of state delivery, which is right here. And all I'm looking for after that is price to break above the changes state of delivery. And the final piece is I want to see price close above the 20 EMA. So if I can get those criteria, this is a instant market order entry, and my stop loss goes at the swing. In this case, it's at the low. And all I do is I measure out with standard deviations where the -2 is, and I'll just skim profits as price starts to tag, major levels, because it's a swing trade. I'm not going to skim profits like, super quick. I'm going to let these ride a little bit more. So like something like this, for example, this is 1R right here, 1.6, and then this is 2R, somewhere around here, right? And then when I get to this level, you're 2.63, and then here's another level up here. So I've kind of been experimenting with skimming profits. I've also been experimenting with just taking 2R off the table. But one thing I've started to learn is I like to skim profits. It works really well for me. It's good for my mindset. It makes me feel good to see that I'm like taking profit. And then that way, in the event that price starts to have, these massive runs, I can actually catch it. And the beauty with EU is the way it respects levels is just, sometimes it's just amazing on the hourly, especially, right? Like even here, like it just pinged off that daily, once again, the daily internal ERL here, buy side liquidity, and instantly reacted from that. It didn't react from the D1 buy side liquidity. It reacted from the internal one, but then it started to close below this level. So I find that interesting. But at this point, the trade's already over, right? I mean, by the time it gets to 3R, I would just probably end that trade, because that's a pretty nice run, right? If you catch that, that's a good catch. So this morning I woke up to a win in that way, and that was nice. I'm using the Fivers. It's a CFD prof firm. I'm trying it out. I picked it up during Black Friday. I wanted to digress. I wanted to have another option in terms of trading that's not limited to 9:30 to 11, right? With swing trading, it could be any time. So I just set alerts, and then at any time I just watch them, right? So this trade, for example, I think I had mentioned that I had missed the entry, but I had ended up getting in around here. And you can see that would have been the next day, right around here, right? 8 o'clock. So I got in, just a little bit above where I wanted to, but that's okay. I mean, the price action made up for it anyways, right? But my entry was around here. If you go back and look, you should be able to see it. I think I shared it. I know I shared it in both Discords, but if I did miss it, I'll share it just so you can see. But that is where that entry was. And then, like I said, the exit was pretty much along the way up here with these lines. Using MT5, have to use MT5, which is another, it's basically like, think of like Trade-Evade, but it's for CFDs, FX. So if you don't know, now you know. So yeah, that's basically how I do EU. And now that it's hit these higher time frame opposing liquidity levels, I'm now going to look to do the opposite of what I did here. I'm just going to wait for this type of a setup to form here, right? We're already overextended with the RSI. This thing might create a higher high now. And so the flip of the RSI divergence to go bearish is price makes a higher high, and then the RSI divergence makes a lower high. So if I start to see something like that happen at a higher time frame, POI here, then the next thing I'm looking for, once again, is a closure. In this case, because it's short, I'd be looking for a closure below a change in standing delivery, and then I'd be looking for a closure below the 20 EMA, which would be this white line here. So that's what I'm doing. That's what I have on tap with EU. That's how I do it. I'll keep everybody posted on any of those setups that I take. That way you can follow along, you can practice, you can observe, whatever you want to do. It's up to you, but I'm just going to be open and share what I know. So if anyone has any other questions, feel free to drop it in the chat. If you don't, it's been an awesome session. I really appreciate your time, appreciate you being here. And if anyone's listening to this on the replay, I appreciate you as well. So I'll give it a little bit, 15 seconds or so, see if anyone has anything to say, question-wise. Thanks, Steve. Appreciate it, buddy. Thanks, Rob. Appreciate it, man. No problem, RDL. Where can you go to learn more about IFEGs? The best thing you can do is go to YouTube, obviously. Go to T-Trade's channel, and then just search IFEG inside of his channel. I feel like he's probably the best teacher to understand IFEGs. In terms of like strategy, speak to me. Let me help you, because I'm actively trading it. So I can just watch any of my live streams that I've done, that I've shared in the Discord. Like, I'm going over trades. Let me show you some strategy. I'm sharing to everybody anyways, but that's the steps I'd take. Thanks, Hard Bowler. I really appreciate it, man. Thank you so much. Exactly. My goal is to just try to help everyone get to a better place. No problem, buddy. Appreciate it. Okay. Thank you so much again. Peace out.